My name is Alvin Brown. I'm a tax attorney with the law firm of Alvin Brown and Associates. We specialize in IRS issues and problems, and of course, one of the common problems that people have is the inability to pay their tax debt, and in many cases they qualify for an offer in compromise. The offer in compromise statute and the administrative regulations focus on a taxpayer's reasonable collection potential. We screen for that, and we will accept someone as a client to handle an offer in compromise, but only if they qualify. And also, the IRS will not accept an offer in compromise unless all tax returns are filed. And we can be very helpful in instructing people how to get their tax returns filed in an expeditious way so that they would qualify to move forward with an offer in compromise. We do a lot of that work. We do it nationally. We have clients abroad, and we help them with their offers in compromise. We're successful at it because we know what the standards are. The result in an offer in compromise is fairly predictable because they look at assets for reasonable collection potential, and those are quantifiable. They look at income for reasonable collection potential, but only income that is in excess of a person's or family's reasonable and necessary living expenses. Most of the time, quite frankly, most of the people who owe back taxes do qualify for an offer in compromise, and it's my job, our job, to get the IRS to accept the smallest amount that they would accept for an offer in compromise, and we're fairly good at making that projection. We after screening a client and after seeing what their data is, we know fairly reasonably exactly what the IRS is going to do, and we don't offer the IRS more money than we think they'll accept. So our job in doing an offer in compromise is to get the IRS to accept the lowest possible number. We're good at it because offering compromises is based on law, so we're familiar with the statute, the regulations, the Internal Revenue Manual, the legislative history, the tax policy, which of course is to give taxpayers a fresh start. We incorporate that into a legal memorandum, which basically forces the IRS to follow their own rules. So we do lots of offer in compromise, and we have a wall filled with accepted offers in compromise, and we get good results. But once again, we have to screen to see if a person qualifies for an offer in compromise. You can also do an offer in compromise for a business, and the same thing. We'll send out a legal memorandum that will justify why we believe that we've met the IRS standards and why we believe we've complied with the Internal Revenue Manual and all the administrative regulations, as well as their published regulations. The thing that we do the best, I think, is advocacy of all those issues. The IRS will take advantage of people who are not represented, and they'll take advantage of people who they think they can take advantage of. So that's why our legal memo is effective. They just don't play games when they know that they're going to that our advocacy does involve the law, their own rules, and of course their own regulations. So we do that. Now, the other thing we do that's very helpful is that we pull the data out of you that the IRS does require for these very complicated financial forms. We put the data into those forms. We get from you all the attachments that are required in those forms. Also, for offers in compromise, they take into account special circumstances. So we pull from our clients any situations that involve illness, special hardship issues, medical problems, things of that nature that we know that the IRS will take into account. The IRS also does an offer in compromise where there is a challenge to the liability, and that's a no liability offers in compromise. We send that out, and of course we send it out with a legal memorandum to justify when why a client doesn't have the tax debt. But in that legal memo, we do the legal justification based on the law, based on the facts, based on the analysis. There's also an offer in compromise that's kind of interesting. It's based on hardship, but it applies even when a taxpayer has more money, more assets than the tax debt. And that's called an offer in compromise based on effective tax administration. Those offers generally involve people who are retired, they have an illness, they're at an advanced stage, and it's clear that they need their assets for their basic support. In other words, assuming there's a tax debt of $100,000 and they have $200,000 in assets, well, they can full pay their tax debt, but if we demonstrate that they need that $200,000 for their for their support, we can get that through the IRS as well. It's a more difficult offer in compromise, but we have had quite a few successes also on effective tax administration offers in compromise. One of the things that distinguishes our office from other people is that we're attorneys. Other people who are enrolled agents or commissioned salespeople, accountants, CPAs, although they do this work, I'm not sure that people are getting the best bang for the buck when they hire them, because we know the law, we know the regulations, and if the IRS is aggressive, takes an extreme position, we know how to push the buttons and we know how to advocate on the law, and I think overall that's why we do a better job. Thank you very much. I'm going to